Welcome to the Baltimore Metro Market Watch, brought to you by Real Estate Business Intelligence and MRIS Company. Let's examine the most recent numbers from the Baltimore Metro housing market, which includes these areas. In July, the national economy continued its trend of slow recovery, with moderate job gains and virtually no change in the unemployment rate, holding at the June rate of 8.3%. Over the last 12 months, the U.S. economy has added 1.8 million new jobs, fueled by growth in the private sector and reductions in the size of state and local government by more than 100,000 jobs. Most economists agree that economic growth will continue to be slow in the second half of 2012. While there has been some positive economic news, including increases in hiring and a slowdown in new applications for unemployment insurance, these signs have not been consistently positive. In addition, the European debt crisis and the dim prospects of any action on the proposed federal budget spending cuts prior to the elections support continued uncertainty and serve to stifle economic growth. While the national economic news is uninspiring, there continues to be positive news on the housing front. Almost all analysts agree the national housing market has begun its turnaround. Both Fannie Mae and Freddie Mac reported strong earnings in the second quarter of 2012, the result of rising home prices, faster processing of foreclosures, and fewer delinquent homeowners. Home prices are up nationally, posting the biggest gains in at least 7 years. The pace of job growth in the Baltimore metro region has held fairly steady, with about 6,000 jobs added over the past 12 months. The local unemployment rate has increased slightly to 7.8%, up from 7.1% in June. Demand in the Baltimore housing metro market has remained strong into the summer. There were 2,322 sales in July, up 6.7% from this time last year, and the highest July total in 3 years. The sales trend is likely to continue since new pending contracts are also on the rise. The 2,883 new pending contracts signed in July are 19.8% higher than July 2011 and the highest July total in 6 years. While sales are on the rise, the available inventory continues to decline. The 12,242 active listings at the end of July are 27.2% below this time last year, the 8th consecutive year-over-year decline exceeding 20%. The 3,452 new listings entered in July represent the lowest July new listings in 15 years. The absorption of homes on the market, driven by increased sales and decreased new listings, is causing home prices to rise. The median sale price for Baltimore metro area in July was $250,000, 11.1% higher than July of last year. At 92.2%, the average sale to list price ratio is up from 88.6% this time last year. And median days on market is 45 days, down 18 days from a year ago. Over the past year, the region has seen key changes on several fronts. Sales activity is rising, both in closed sales and new pending contracts. At the same time, the active inventory continues to decline, reaching 15-year lows for new listings over the last 2 months. These trends are putting upward pressure on home prices and speeding up the median days on market. While market conditions appear favorable for sellers and interest rates remain at historic lows for buyers, underlying economic and political uncertainty continue to impact market dynamics. That's the Baltimore Market Watch for this month. Check back next month for the latest.